Brian Jessen speaking with Guaranteed Rate. I'm going to try to be as short as I can, but I have a lot of information to try to get out to you. Kind of a lot of economic reports today. I'm going to swing over this way. We had our gross domestic product thing, which shows how much product is being produced by America. And it was up a little more than expected, 2.6 versus 2.4, which is positive. The market liked that, but especially after two prior quarters of negative growth, really basically driven by a lot of exports, a lot of increase in U.S. exports. Consumer spending had slowed down from quarter to quarter, though, which is showing the effects of inflation and higher interest rates. But an index in that gross domestic product report showed inflation, instead of going up 9%, was only 4.1% in that particular report. We had one today talking about inflation that the Fed really, really likes to follow. It's called PCE. We don't need to get too technical here, but that was up 0.5% month over month as expected and 5.1% year over year. They're trying to get down to 2 to 3%, so that means they'll continue to raise their short-term rates. Really, let's talk about housing for a minute. Housing investment's gone down 26% annual rate. There's been 6 quarters in a row in drop in real estate investment. And as we know, if you're in the real estate business or home shopper, home sales have declined 8 straight months. Basically because prices have gotten so high and interest rates have gone up 4%. So that's what's happening. The average interest rate on a mortgage is probably in the high 5s to 7%, depending on the product, which is also taking first-time home buyers and their affordability down. So people are hesitating a little bit, but on a positive note, if you think about it, the next 2 to 4 months might be a great time to buy. You get a better price. You will be able to negotiate terms like a closing cost credit or maybe even a rate buy down, which I'd be happy to talk with you where they lower the rate the first year by 2%, the second year by 1%. Then more than likely we'd refinance that in the next 12 to 18 months anyway. And I think there's some positive ways. If you're in the market the next 2 to 4 or 5 months, you can get a better deal knowing that we're going to redo the rate in really the next 12 months or less. So Brian Jessen, Guaranteed Rate, give me a call. There's lots of information to share. I don't want to get too technical and wonky, but I think there's opportunities if you're strategic to be a buyer of real estate in the next 2 to 5 months. Thanks again. Have a great weekend. Bye now.